So, the Tesla stock voting machine is in full swing today. The stock has increased by 10% on the day, a massive one-day movement that has a lot of momentum. If there isn't too much resistance, it might even reach $300. If some other events happen to further increase the momentum again, like an announced Cybertruck delivery event or Elon acknowledging that a Model 3 refresh has occurred and it saved 5% in costs, or something similar, the stock may rise further. However, this movement isn't the result of any of these kinds of events. As far as we know, the company is essentially the same as it was yesterday, with the exception that Adam Jonas from Morgan Stanley has changed his price target for Tesla from $250 to a massive $400. The price of Tesla's shares was roughly $250 at the time, and then increased to $273 during the day, which is a significant increase in price. Target a 60 increase all of a sudden. Someone had to have experienced a major event, like the release of the Gen 3 model, improved margins, or at least some new announcement, for someone to suddenly become this bullish on Tesla. However, Adam Jonas' decision to become bullish on Dojo and conclude that there is a lot of potential benefit from the AI training system for third parties as well as Tesla is to blame. I will admit that many of the hyperboles on Twitter are probably too bullish, but in their defense, their passion will likely cause them to conduct in-depth research on the company, but not to the same extent as a single stock analyst would, especially if they have to follow perhaps a dozen other companies too. Elon Musk is worth 7 figures in Tesla stock and makes 6 figures a year talking about it. Many of them have known about Dojo's potential for a long time and have had similar thoughts about it. In fact, I believe that a lot of this started at the shareholder meeting last year when Elon literally talked about it. However, the stock did not react to Elon's talk about it. Instead, it reacted to Morgan Stanley. This also relates to what I was saying about the Highland model, which is a new model that has been introduced and will raise margins, demand, and profits. The stock price did not react to other past events, such as when Tesla first began producing the Model 3 in Fremont, meaning that gross profit could finally get as observed in the finances. Because of the reasons I mentioned earlier, the market and bulls who invest a lot of time in researching this particular company don't understand it as well as the company itself. This is partly because it can be challenging to determine what is truly valuable in this case. The story and the potential for growth are what matter most. Now there are some more actual stock price moving events on the way, the biggest one being the Cybertruck delivery event if this gets locked in soon, and we see that the Cybertruck will start deliveries this year. Then the market will react to that by the looks of what Jiva Shanghai did in August. The Model 3 Highland had minimal disruption, somehow, when it came to production, and with there also being inventory, then deliveries and production for Q3 may not be as bad as the market priced in. This was the main reason for the stock to drop once it almost hit 300 on the earnings call, when the shutdowns were announced, an obvious overreaction for a start. But the fact we get the Highland out of it means it was actually a positive anyway. I don't believe that reaction has totally recovered yet, so Q3 results should sort that out, which will come out in just a few weeks now. Then the earnings report and call, which is hard to know what direction that could take things at this stage. There will be some big questions, at least I hope, about the next factory in Mexico, hopefully along with some 4680 update. Finally, I think we might have a similar situation this quarter as last, how it basically ran up to 300 until the earnings report and call, and from there it will likely come down to the earnings call again. This time it may very well break 300 and could run to mid 300 if there isn't too much resistance. I mean, Adam Jonas is saying 400, 300, still a little way of 400. But just as I always remember that while things may appear promising, and there is a lot of promise, Tesla will need time to develop and improve its financials. In the meanwhile, the market is more concerned with the long-term picture with FSD. Nothing fundamentally has changed at Tesla right now, aside from sentiment. Yes, there is a ton of potential there with enormous amounts of income, but we don't even know how Tesla plans to make more EVs. The market is erratic, and like I say, it's a manic depressant with bipolar disorder, and Dojo. But then sentiment can change quite quickly, and instead it focuses on price cuts and margins get lower or demand issues, the shorter-term things. At this point, we believe that we had a new factory in Mexico that would produce a new model, but we don't even know when that will happen. It could take years. Therefore, we're hoping that news of a new factory that will produce the next model will soon surface. Or we have 2 other factories that are only producing about 1/3 of their capacity. If not, we could increase sales of 4680 models or other models. But we don't know what is planned there, and nobody ever seems to inquire about what the plans are for Texas and Berlin when you expect to ramp up production of the Model Y. The Model 3 Highland could raise margins by about 5%, which is a conservative estimate based on what most people in the community believe. A similar update would be seen in the Model Y, implying margins up there as well, and that would essentially mean operating margin is 50% higher than it was last quarter. This is what analysts should be discussing. Based only on those two updates, profits should reach 50 sometime in the upcoming year when the Model Y upgrade takes place. These are the basics to watch out for, even with cautious estimates. For in Tesla, but they don't seem to impact the stock immediately. It's more to do with other noise like Ford and GM using the charging stations, which is going to increase revenue by hardly anything. But you see, it doesn't really make sense, does it? The fundamentals will keep the base value of the business. And then there is all the FOMO value of all these other amazing ideas that may or may not come into fruition, or maybe solve next year or next decade. No one really knows, but the stock price will be a roller coaster in the meantime, as if these potential ideas come into fruition, they could add a zero onto profits. Then equally, there is some bad news like shutdowns, which reduce profits by hardly anything compared to the actual valuation of the company, let alone the drop in share value that we saw just for one quarter having a small shutdown. Although Elon did call it an international factory shutdown, and so many inferred it to mean that all factories are being shut down, whereas I said it was likely just Model 3 in Fremont and Shanghai, as in is required for the Highland. Hence, why not much production was lost last month anyway. I was right about that, and the market overreacted to an insane degree. I think the key three figures coming in will alter all of that, and it should get a bit of a surprise then some. It was a great day for the stock, considered essential to providing the statistical safety of Tesla's automobiles, giving the company a significant advantage over competitors in the licensing process with the government. Currently, Tesla's customer-owned fleet travels more than 120 million miles per day. Hopefully, this rally continues, and the widespread coverage of technologies like chatbots has enthralled both the public and businesses. She believes that the rise of AI will disrupt established technology companies like Google's parent company Alphabet, which is developing its own ChatGPT alternative called Bard. According to ARK Invest Research, Wood's organization also views Tesla's extensive data library. Who knows, maybe we actually do see 400 again before the end of the year. Stranger things have happened. Thank you for listening. Please give it a thumbs up. Other events that could suddenly occur that the market seems to really validate, like Ford adopting Tesla FSD even though it probably wouldn't be until 2025 or something. The market seems to love these things, anything that further validates Tesla. Elon even mentioned the Gen 3 car on Twitter the other day when someone asked if the Cybertruck would be inspired by a Cybertruck.